Hi, everyone. Thank you for joining us today. We'll get started momentarily. Okay. Hi, everybody. Welcome and thank you for joining us on today's webinar, Fundamentals of Liability Certificates of Insurance and Things You Need to Know with the Propel team. Just a few housekeeping items before we jump into today's content. If you called via audio, we encourage you to join us on another device so that you can view the presentation. All attendees are muted to ensure audio quality throughout today's webinar. Also, if you have a question, please use the Q&A feature at the bottom of your screen, and time permitting, we will get to as many questions as possible. The chat bar will be used only to send out resources mentioned during today's call, so please do use the Q&A box for your questions. Also, this event is being recorded, and the recording will be made available on Arch as soon as possible. We have with us today Jessica Luck, team manager in the Seattle office at Propel, with introductions. Again, thank you for joining us today. Now let's get started on today's presentation. Jessica, it's all yours.
Welcome, everybody. Thank you so much for joining us today. I'd like to get started by introducing our speakers. We have Chanel Devana, an account executive in our Tacoma office, Trisha Hankey, an account manager in our Seattle office, Marcy Berger, a team manager in Tacoma, and Emily Muir, a senior account manager in our Seattle office. I hope you enjoy our presentation, and I'll hand it off to Chanel to get started.
All right, well, thank you, Jessica. Good afternoon, everyone. Today, we're going to talk about certificates of insurance. They are also known as, and will probably be referred to during the seminar, as COIs or certs. This is a foundational course, and many of you may already be aware of much of the content that we will be talking about today. But we hope that you will still find some nuggets of nuggets of wisdom throughout our discussion. For others, this information may be new. In either case, we want to lay the framework for future seminars that we're working on creating now that will build on certificates and build on contracts and build on other insurance concepts that you can apply to your business. Our objectives today are to help you understand what a certificate really is, and probably more importantly, what a certificate is not. It's often misunderstood to be an actual policy of insurance, but it isn't. So we're going to set that record straight for you. We will identify where the content is located within the certificate document and focus on what key coverages you will find there, what you will need to look for when you're reviewing certificates for your company or perhaps requesting them on behalf of your company. Lastly, we will help you recognize the value of the Accord COI and the relevant endorsements you are likely to find attached to that properly issued certificate. Those endorsements should be attached to your certificate, and we can talk about that a little bit later. At the end, we will open up for questions that have been placed in the Q&A, so be sure to enter any questions that you might have throughout this webinar, and we will try to address them all at the end of this session. The what and the why. So, what is a certificate and why is it needed? A certificate is used to show evidence of insurance coverage for an entity at a single point in time. That certificate is most relevant on the day it's actually issued. It also isn't all inclusive. Not all the insurance coverage that an entity purchases may be reflected on the certificate. More often than not, the certs are tailored to show the insurance coverage that is actually required via a contract or an agreement. Hence, certificates are typically requested to support compliance with contractual requirements, or simply evidence of insurance that's in place. Some examples of when a certificate may be requested may be to support construction contracts. For instance, an owner may require the general contractor to have certain coverages or certain levels or limits of those coverages. Likewise, the subcontractor working for the general contractor will have to provide evidence of their coverage in compliance with that contract. Also, we may have certificates requested when we have lease agreements, when we're leasing property, land, buildings, or with rental agreements, renting heavy equipment or vehicles, etc. These are all situations where there are contractual requirements and to maintain certain insurance coverages, and that is where certificates are generally used. I will now turn it over to Tricia.
Thank you, Charnel. So before we get into what a certificate of liability insurance is, we first need to talk about what it isn't. A certificate of insurance is not an insurance policy, nor should it be used in the place of a written contract. It does not amend the policy or afford the certificate holder any coverage as an additional insured under the named insured's policies. It does not matter if the additional insured or waiver of subrogation boxes are checked or what language is written in the description of operations box. This is why it's important for you to also be receiving and reviewing the relevant endorsements. And with these webinars, we hope to help you better understand what you're looking at. So starting at the top left, this is where the insurance agency who issued the certificate of liability should be listed with their address and name. Next, we have the name and address of the named insured on the policies. Then we have the policy numbers listed in the middle next to the associated coverages. Then we'll have the different insurance coverages, and next to those coverages, we have a letter indicating the associated insurance carrier. And then we have the description of operations field, which is a catch-all space to respond to specific requests. Often we include the project name or job number. You'll also see the entities listed here that are requiring additional insured status. Then at the bottom there, we have the certificate holder box where the company to whom the COI was issued to is listed with their name and address. Now at the top right is the date when the Accord 25 was issued by the insurance agency. Next is where the insurance companies providing the coverages are listed in their corresponding letter. Then we have the limits of each policy, which you'll want to pay attention to make sure they comply with your contract requirements. Then the effective dates of each policy, which is something you'll also want to pay attention to. You'll want to make sure the policies have not expired, and you'll want to make note of the expiration date so you can make sure you obtain an updated copy when the policies renew. Lastly, at the bottom there, you'll see the insurance agent's signature. And now I'll hand it off to Marcy.
Awesome, thank you, Tricia. Next up, we are going to kind of take just a closer look into each of those coverage lines that are included on the certificate. So the first section is your general liability. The first set of boxes will identify how the general aggregate limit applies. You have three options here. Per policy means that the most the insurer will pay for all claims during the policy period is that aggregate limit. The per project means the insurer will pay up to the aggregate limit for all claims on any one specific project. So each project will have that separate limit to apply to. You'll see this most often on contractors, vendors, suppliers, etc. The per location means the insurer will pay that aggregate limit to each location of the policyholder separately. So this is important for retail, building owners, banks, where you might have multiple locations that you're insuring. We typically don't want to see the per policy aggregate. So if you do see that on a certificate, kind of a red flag. Just kind of pay attention to that. We would prefer to have one of those two other options. Your next set of boxes will be the coverage trigger. And this is either going to be occurrence or claims made. So occurrence form policies cover losses during a specific policy period, regardless of when the claim was reported. And claims made form, the policy is triggered when that claim is actually reported. So 9 times out of 10, I usually see occurrence form here, but claims made sometimes is the only option for certain types of businesses. So just something to keep an eye on. Over on the right side here, we're going to take a look at auto liability. Any auto, or symbol 1, as it's also referred to, means that any auto the insured owns is covered. And this also applies to hired autos, such as rentals, and non-owned autos, such as employee vehicles, while they're using them for work. One thing to kind of be aware of is if you see scheduled autos checked, this is also referred to as symbol 7. This means only vehicles the insured specifically reports to the carrier are covered. Many contracts will specify a requirement for any auto or symbol 1, so make sure you kind of keep an eye on that to make sure there's no breach of contract. Next page, we are going to take a look at umbrella or excess liability. Here, either box can be checked for either umbrella or excess. There are very few true umbrella policies anymore, so either option is acceptable. You'll also want to make sure, right next to that, there's the occurrence or claims made box. Make sure one of those is checked as well, and that it follows the underlying general liability policy. So if your general liability is occurrence form, you want to make sure your umbrella is occurrence form as well to avoid any gaps in coverage. And then the limits for umbrella, that's going to be whatever is required in your contract. So this obviously varies from no umbrella to 50 million. So just make sure you're double checking your contract to make sure that that's in compliance. Workers' compensation up next. Workers' compensation policies come with 2 parts to them. You have your workers' compensation and employer's liability. Workers' compensation is also referred to sometimes as part 1 of the policy. And this is insurance that covers employees' medical expenses and a portion of lost wages from work-related injuries. This is also a no-fault coverage. Part 2 is your employer's liability. And this insurance protects employers from potential lawsuits from their employees over work-related injuries. If you see on the right side, there's 2 boxes that you can check there. If you see the per statute box checked, this typically means that this person has workers' compensation coverage. And there's no specific limit to that. It's just per statute of that state. If you see the other box is checked, this typically means that they operate in a monopolistic state. So there are 4 of these states. It's North Dakota, Ohio, Wyoming, and Washington. And workers' compensation for those 4 states is provided directly through the state fund. So you're only going to see employer's liability or stopgap referenced in this section. And employer's liability or stopgap does have a limit associated with it. We usually suggest that it's $1 million, but you may see 500,000 or other limits occasionally. So that kind of wraps up our coverage line sections, and I'm going to hand it over to Emily. Oh, Emily, I think you're muted.
That would have been helpful. So as I just said, we just took a little bit of time to go over the Accord certificate. So now we're going to dive deep, or not deep, we're going to take a little dive into the endorsements that most commonly accompany our certificates. So the standard forms that we most often see from our subcontractors or insureds are the additional insured forms, primary non-contributory, waiver of subrogation, and per project aggregate. Now, each one of these endorsements triggers the policy to respond in different ways. So for the additional insured endorsement, it's going to protect the additional insured under the named insured's policy, allowing them to file a claim if sued. A general contractor might require subcontractors to name the general and the owner on the subcontractor's policies. The primary non-contributory endorsement or primary language make a specific insurance policy primary, meaning to go first, and non-contributory, meaning without contribution, over the other insurance policies of a specific party. This party is typically the additional insured. Now, the waiver of subrogation is an endorsement that prohibits an insurance carrier from recovering the money they paid on a claim from a negligent third party. An owner or a client may require this endorsement from their vendors or subcontractors to avoid being held liable for claims that occur on their job site. Lastly is the per project aggregate, which Marcy explained means that this policy is going to pay the same occurrence limits for each claim that occur on any specific project. Whereas if it were a per policy aggregate, the policy would respond during any one policy term.
Wonderful. Thank you so much, Emily. I'd like to thank everybody for joining us today. We really do appreciate your time. Please be on the lookout for upcoming invitations to our webinars that are including a deeper dive into certificates of insurance, specifically additional insured forms, contract review and compliance, and cyber liability. It does look like we have a little bit of time left. So if anybody has any questions, go ahead and enter them into the Q&A section of the webinar, and we'll see if we can get some answers for you. And again, I just want to thank everybody for joining us this afternoon, and I hope you have a great day.
Thank you. Thank you, everybody. So our first question is, what is an additional insured? I believe that was towards the beginning. So Tricia, would that be?
Yeah, so an additional insured, you'll see that on towards the end there. That is when they will receive some coverages underneath the, for example, a general contractor and a subcontractor. A lot of times you'll see a general contractor require to be named as an additional insured under the subcontractor's policy. So if there's a suit, they could have coverages under that subcontractor's policy.
Great, thank you, Tricia. Our next question, can stopgap be written in other sections and be acceptable, for example, referenced in the description or other sections?
I can take that one. So yes, so we live in those odd states like Washington, where we see stopgap quite a bit. You'll also see it sometimes referenced in the general liability section. So say they have a separate workers' comp policy that doesn't include the Washington stopgap or North Dakota or whoever it may be. You can also see it added on the general liability policy. So sometimes it's listed there under the deductible. I have also seen it listed in the other, like in the bottom section of the Accord, where you have other policies, you can kind of a free-for-all. I've seen it listed there. I don't know that I've often seen it referenced in the description section. But I would say as long as you make sure to include a reference to the policy number, the effective dates, and the carrier, then it would be okay. But I'd say I typically will see it either in that work comp section or under the general liability.
Okay, kind of to follow up with a little bit of that, what if the policy number isn't listed on the Accord?
I would say that is a big no-no.
Yeah.
We definitely want to see a policy number listed. If it's not, then I would reach back out to your client and or their agent, whoever you're corresponding with, and ask that they reference that.
Thank you, Marcy. Our next question, can you explain the difference between umbrella and excess?
I can probably take that one. Nowadays, the difference between an umbrella and excess is very subtle because there really isn't any, like, a true umbrella policy is rare. Essentially, an umbrella policy used to provide what's called drop-down coverage. If for something wasn't covered on the underlying policy, the underlying general liability or the underlying auto, then the umbrella would drop down and take its place. Now we're not seeing that feature so much anymore, or the umbrella has its own sets of exclusions. So where professional liability may be excluded on the general liability, for instance, the umbrellas used to be able to drop down and provide coverage. Well, now that umbrella would also have a professional liability exclusion. So I wouldn't get too caught up in the difference between them because they are used, the terms are used interchangeably, the forms are kind of used interchangeably. So yeah, it's very, very subtle. Also, I think the other reason that there is a difference, the other difference I should say between the umbrella and excess is that umbrella policy generally has a retention, which it usually is 10,000 before it will start paying. In other words, it's a deductible before the umbrella will start paying, whereas an excess generally does not have that retention limit.
Great, thank you, Charnel. Our next question, what if workers' compensation is expired on the Accord form, but L&I's workers' compensation has been updated?
I would say, so in Washington, anything referenced on the Accord should just be their employer's liability or their stopgap. You can also go online to L&I to pull a certificate. So if you're tracking clients, if it's a monopolistic state that they're working in and you want to track their workers' compensation, I would ask them to send a copy of their L&I certificate as well. That's going to show you that they're active with their workers' compensation account through the state. Otherwise, if it's showing something is expired on the certificate, whether it be the stopgap or whatnot, I would just ask for an updated one. Hopefully that made sense.
Yeah, thank you, Marcy. Just to kind of, this is another workers' comp question. We are a subcontractor who outsources part of our contract. Is it necessary for our subs to have a workers' comp policy?
Yes. Yes, I mean, absolutely. I mean, whether you're outsourcing it or not, you want to make sure that those employees are being covered one way or another, whether that's on your policy or their own policy.
Okay, here's another person who subcontracts. Would our policy require that we require waivers of subrogation per project by each of our subs, or is this just on the GC level?
So I'll go ahead and take this one. You can go about it two different ways. There are subs and subcontractors that will have all operations certificates for the year, and you'll get one renewal each year for any 1 or 10 projects that go on during that term. Or there are some contractors and subcontractors that prefer to issue project-specific certificates. But the nice thing about a blanket endorsement, which most oftenly are included in all of our contractors' policies, is that it's not specifically called out for any one project or owner. So you can go about it two different ways.
Okay, thank you, Emily. Lots of questions coming up. Just a reminder, please put them in the Q&A. It's sometimes hard to follow. They get lost in the chat. So please put them in the Q&A for us. If one of our customers comes to visit and sees their product in process, do we need a cert?
I can take that one. I wouldn't say that generally, and getting a certificate from each person that comes to your site is pretty difficult, cumbersome, and very much an administrative nightmare. If they're just coming to take a look at progress or do a tour, then no, I wouldn't worry about it personally.
Thank you, Charnel. Why is the per policy a red flag on their certificate instead of a per project or location?
So I would say that if they have the per policy checked, the limitation is that that aggregate limit, which is typically 2 million, is all you're going to have for that policy period for all claims. If you have a per project or per location, you're going to have a separate aggregate limit of 2 million for each project or each location. So it just limits the amount of insurance payments that a carrier will make in any one policy term.
Great, thank you, Marcy. Could you please go back over the stopgap and workers' comp? Is the workers' comp, if the per status box is checked, just mean that the company has workers' comp through L&I? Is stopgap completely separate in addition to workers' comp? Sounds like a similar question to what was asked, but it sounds like they want to repeat.
So workers' compensation is confusing, and I just probably opened a whole can of worms when I went through it. So I would say, and it's hard because we do have those 4 monopolistic states like Washington where it really does, it's confusing. I would say if a company, and it could be also some agents issue certificates different. So that's also part of it as well. But I would say that if they have workers' compensation in any other state besides one of the 4 monopolistic, that the per statute box should be checked. And that is stating that they have workers' compensation coverage per statute. The employer's liability, like I said, is even if you're in one of those other states, you'll have your workers' compensation, which is part A, and then your employer's liability is part B. So they can be on the same policy, but they're separate coverages. They respond to 2 different types of employee claims. And the employer's liability will have that $1 million limit associated with it instead of per statute. So in Washington or one of the monopolistic states where we personally as agents don't provide the workers' compensation coverage, when we issue a certificate in that section, we try. So I would say Propel tries to check the other box because we're saying, hey, this isn't per statute because it's not part A workers' comp coverage. We are just providing the employer's liability or stopgap. And these are the limits that are associated with it. I know it's really confusing, so I'm sorry if I'm not explaining it correctly. Maybe that'll be another topic. We can just have a workers' compensation series that just goes over that.
There you go, Marcy.
That sounds like fun.
Yeah.
Okay, we'll just keep rolling on the questions. For endorsements, are there specific form numbers for each type, and how do you know what should be included with the accord?
I can probably address this. For endorsements, there is a different form number for various endorsement forms. ISO, which is the ISO Insurance Services Office, creates a lot of the standardized insurance forms, including additional insured endorsements, and they all have different form numbers. However, a lot of carriers, a lot of the big name carriers, Traveler, Safeco, the list goes on, actually have their own forms that they have adopted and filed through the insurance departments. So form numbers can vary greatly between different forms. What you really want to focus on is what is actually required in the contract. Typically in the contracts, it won't even say a form number that's required, and or it might reference an ISO form number such as CG 2010 or CG 2037. It might also reference certain edition dates, and each of those editions have various nuances to them. And generally would also say or equivalent. So this is something that we will dive deeper in when we go into endorsements, because we could spend easily a half hour or an hour just discussing additional insured endorsements. But be aware that all forms will have different numbers, all carriers will have different numbers, and there is a lot to really actually understand and know about those forms when you're reviewing those certificates.
And that will be our next class, our next webinar is going to be that deep dive into those different forms.
And I want to add one more comment here too, is that keep in mind that obviously within a 30-minute time frame, it's hard to be all inclusive, but please, if you're one of our clients, please reach out to us. Reach out to your account manager, reach out to your producer. We are happy to go through this in much more detail with you.
Thank you, Charnel. I just posted in the chat the link for the Propel locations so that you can have the contact information there. So just grab it out of the chat. We are up with time. We have quite a few questions. If somebody wants to stay on, we'll continue with a few more questions. Is everybody okay with a few more minutes?
I'm sure.
Okay. Is there a benefit of getting a project specific certificate rather than an all operation certificate?
Want me to? Oh.
In my opinion, no. I mean, there really isn't. I mean, it's from an administrative perspective. Some of our clients like to have certificates per project so they can drop it into the job file. But most of the additional insured forms and primary non-contributory forms and stuff that you will see are blanket, so they're not usually issued per project per se. So a all ops certificate works in those cases.
It does.
Thank you. In what instance would a lower level of coverage be accepted other than the subcontract requirements?
I think at that point it becomes a business decision. You know, if your contract is requiring a certain level, if you're the GC and you're requiring your subs to have a $5 million umbrella, they should have a $5 million umbrella. If they don't, then at that point it becomes a business decision. Do we want to accept a subcontractor, maybe one that we know we work with well, they have a 3 million, okay, that's okay for this job. You know, maybe it's a smaller job. It really depends on the risk tolerance level. And then if you're on the other end of the spectrum, if you're the subcontractor signing a contract and your GC wants you to have a 5 million umbrella, but you only have 3, you can certainly negotiate that up front and would do so before you actually sign that contract.
Great, thank you. Somebody is asking about the recording, and yes, it will be posted on both the Alera and Propel's public website, as well as Alera's Arch website. Just a couple more questions here. On my cert policy and project are checked under commercial general liability. Does that mean we are only covered per policy for the policy period or project?
I would say the broker made the mistake. It's either per policy or it's per project.
Yeah.
Okay, thank you. Is there a cross-reference between the ISO forms and the larger companies?
I wish.
Normally there's specific language that we'll point out in future webinars that kind of differentiate the different additional insured forms and what to look out for.
Okay, thank you, Tricia. We'll take a few more here. We are trying to determine what is a reasonable expectation and a timeline from an out of compliance sub as to getting an expired COI updated. At what point is it a major risk to the contractor? 1 day, 30 days? Any feedback is appreciated.
That's a tough one. You know, I mean, we know in the insurance industry, sometimes it comes down to the last minute renewing policies. It actually happens quite often. So getting the certificates out is usually our top priority. But I would say, you know, there are times when it takes us a few days to get those out after expiration. I would say, just as a suggestion, that if you don't have that within, you know, a week after they expire, definitely start pressing them and pushing them, because you don't want to be stuck in a situation where their insurance lapsed or canceled and you have them working on the job, and then you're ultimately going to be responsible should a loss occur and they don't have coverage. So so I would say, you know, 5 days is kind of a suggestion. I would say I don't know that I would let it go any longer, not getting certs out for my client. So
And I think it's worth also, Marcy, to your point, is if you have an uncomfortable feeling about coverage or concerns, and you don't have a certificate on file, it can be a business decision to keep a sub off a project until that's remedied. And so, it's good to reach out to your broker and to kind of figure out what your response to that type of situation is going to be. Because you do have methods behind just, if you don't have a certificate, you have a method to kind of pigeonhole the sub to get you what you need.
Thank you, Jessica. What happens when you issue a certificate and then the policy cancels? What is the safest thing to do?
Are you referring to a broker that issues a certificate and then the client's policy cancels, or are you referring to maybe you are a recipient or a certificate holder?
Yeah, there is no specification on that question. So whoever asked, if you want to clarify that. So let's just keep going on. What is your suggestion about naming excluded members, officers in the description section of the policy?
I can take this one if you want. The description of operations is kind of one of my pet peeves, because that particular section tends to be overused. Again, keeping in mind that a certificate is just a piece of paper that shows what insurance coverage is in place. We can't really use that section to really identify things that are covered or not covered in a policy. So really that section should be used just to describe the project, or just to describe the vehicle, or just to describe whatever we're really issuing the certificate for. So as far as naming excluded members or officers, I'm assuming you're referring to work comp. We don't typically do that. Because again, I mean, where does it stop? Do we, there's so many exclusions and so many different kinds of policies. I mean, how many things are we, could we put in there? It could be pages and pages and pages. So the description of operations generally is used just for the description of whatever's going on that we're referencing on the certificate. So I don't know if that helps. But.
Great. Thank you, Charnel. And that seems to be one last question, and this is kind of a repeat. We just had one pop up, backdating certs. We've had clients contact us many months after a project is complete asking for a COI for the period in which we worked on the project. We only ask certs to be issued if the cert requires them. These late requests are from those clients who didn't previously ask for one. Can certs be backdated? And what if the policy period has expired?
I can answer this one. Yeah, they could issue a certificate showing the prior policy period, but you'll also, want to make sure that you'll receive an updated one as well. So like for us, it's pretty easy for us to go in and issue a certificate from a prior period. So just again, you'll want to make sure that you do receive an updated one if they are requiring it.
Comes up a lot when someone's getting audited. So you may have the contractor you're working for gets audited, and they're going to get dinged and charged if they don't provide certificates for their subcontractors. So a lot of times you'll have them come back after the fact saying, hey, we need your cert, we never got it. So that's 9 times out of 10 when that situation arises, it's because of an audit.
Yep.
Okay, boy, a lot of questions on these certs. So one last question on our sub certs. They have us listed under cert holder, but the description box shows certificate holder only. Does that mean we are covered for all projects? Thanks.
At that point, it becomes just an evidence of coverage. You're not necessarily covered for anything in that case. You're just getting evidence that they have insurance coverage in place. So if your contract requires that you be an additional insured, then there should be some additional insured endorsements attached, and or some indication on that certificate that you're an additional insured, not just a certificate holder.
All right, that's it on the questions. Thank you, everybody. Appreciate your time, your expertise. Thank you to the Hope Propel team that joined us today, and all our attendees and listeners. As Jessica mentioned, there will be upcoming webinars that as soon as dates are picked, we will send out that information. So again, thank you, everybody, and thank you for your time. Have a great, wonderful rest of your day.
Thank you.
Thank you.
Bye, everybody.
Bye.